Happy Friday, traders. It is 8:02 a.m. Chicago time on the 29th of January, 2021. This is episode number 1927. Thanks for being here. It is the end of another week. Very busy week. This morning, looking at the Convergent Trading pre-market summary sheet. Let me turn down my news feed here. We see that we have a risk-off tilt this morning. We see that the overnight session involved a decent amount of selling, especially in Europe. The Euro Stoxx 50 and the DAX are the weakest this morning. What's interesting, though, the 30-year bond is also off. It is down an entire handle. It is down an entire handle along with the equities. It's interesting to see. I'm not really sure what's going on here. The Bund is also off 81 euro cents. The yen is off, which is another safety asset. The S&P is off 14 points currently. The 10-year note's off 9.5 big ticks, 19 small ticks, and the U.S. dollar's off. It's just half a penny off now. It's almost unchanged, with gold leading this morning. Gold, silver, really pushing higher. So very odd setup here as we come into today's market. The market, the S&Ps continued to sell off after the close yesterday and moved back to basically where we were in the extended trading hours before we opened yesterday morning. So we've got almost the same kind of, we're trading in the same kind of range as we did when we opened yesterday. Yesterday's open in the S&P is around 37.67 and a quarter, and that's exactly where we're trading now. So we've explored down in a big flash push, and have pushed up yesterday all the way back to 38.22, which is a key number that I showed from a couple days ago, and then we have come off and come back to 37.30, 37.22 overnight. So we've had a 100-point move down and pulled back up 100 points or so, or 60 points, and then we're 100 points off of that. So very, very strange. It's swinging pretty widely in a balance overall, and I'm seeing that across the board in various products. If I show you the summary of this is this chart is basically my overview chart of various products. The Russell's at the top. You can see the Russell topped out and has been trending down in what is almost a balanced trade. The Dow Jones E-mini, the E-minis topping out and kind of pulling back. Crude oil is the third pane. Crude oil in a range between 53.5 and 51.5. And gold completely in a range with the high of around 1876. We're at 1875. And then at the bottom, the 10-year note is coming off this morning. So a very kind of log-jammed market. So that's the overall picture here of where we are and what we're doing. For today, as you may have heard, a lot of retail equity brokerages prohibited the purchase of or adding to positions in GME and various issues. I actually was very curious about what everybody thought and started a thread on that that's been active over the evening on my Twitter. GME and others are back on. Bitcoin shoots up 14%. We got the FOMC behind us, and this morning it looks like the key drivers really The U.S. stock futures dropped as Wall Street battle between hedge funds and retail investors rattled investors' confidence. European stocks were lower as uncertainties over COVID-19 vaccine supply in Europe cooled risk appetite. Asian equities ended in the red. Oil prices edged up on tighter supply and falling U.S. oil inventories. Demand for safe haven currency strengthened the U.S. dollar. Gold prices were higher, and so on and so forth. There's just a lot going on. Chicago PMI today at 942 for private members and 945 to the public. Michigan final, which is not really a mover as much as the prelim, pending home sales as well. We got personal income and spending this morning, PCE price index, as well as a core PCE before the open. So that's where we are today. We have Fed's Kaplan at 1 and then Fed's daily after the market closes. In the overnight session, the S&P's traded currently 502,000 contracts, very, very high volume the last 3 days in the overnight session, very active overnight session on heavy volume. The overnight inventory is around 90% short coming in, and the range is about 56 points. 56 points. The overall profile is balanced, thinnish to balanced. Clear price discovery throughout the overnight session. I'll cover that. Remember, the 1 sigma of the range, the 1 sigma of the overnight range is 52.5 points, and the 1 sigma, the mode of the overnight range, what is most common, is around 31 points, with the mode of overnight volume over the last year at 370,000. And mostly in the most recent past, it's around 220,000, 190,000 to 220,000. And again, this morning we have 502,000. This number has gone up, of course, as the market continues to trade. So I know it's a lot to digest, but that's the overview. Now let's dig into what was expected yesterday. Yesterday, I was looking for the response back into 50 and a pushback to 28.23. If you look here, I talked about the mid of the gap. Excuse me 1 second. The mid of the gap at 28.23 as a key target. Not only is 28.23 the mid of the gap, but we have this 28.22.21, which was a very important test. A couple days ago. So that would provide some confluence and a key resistance area. That's for scenario 1. Let's take a look at what the market actually did in yesterday's trading. This is a 4-tick Renko, so it's a bit of a busy chart. It's going to look crazy. Let me up that to 6 ticks. Here's a 6-tick Renko. What we didn't get is we didn't get an open that pulled back into this 50 area, at least to lean against this high volume node as expected before the move up, and then the trip up to 23. Look at the high here. The high is exactly in line with where we expected it to push. The gap mid at 23.25, and then the stock zone at the 22, right on point. Yesterday's stock zones and market generated levels were really solid. I'm not saying that that's always the case, but it's nice to see that. It is respecting day type levels. We get this big rotation early on, 27.5 points. That is very wide. It's a very wide rotation on this time frame, and then we get a pullback to where we get a pullback to exactly the mid VWAP. We putz around in here. It looked like it started to fail. This stock zone, these stock zones didn't really move actually. These are for today, but in fact they didn't really move based on yesterday's action. But you could see it pushed right into that stock zone first in the 94 area. Remember, the 94 is the MC point of control, so there's no movement there. pulls back to the mid, then pushes into the lower stock zone at 87.50, retests the mid, and then we get another impulsive move, 13 points, migrate above the 3,800. We tackle the 3,800 right here, miss by a tick, pull back to this prior triple top area right here. You can see resistance becomes support, and then it pushes into 3806, the next key area up. Remember, 3806, 3809, and then above there we have the 13, and then above there we have the 22. Very methodical. Boom, 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 and then it comes all the way back. Look at the profile given yesterday's action. How blunt can a profile get? What this is saying, what this profile is saying is, because we're profiling volume at price on the vertical scale, what this is saying is the market was actively seeking and traded pretty much the range equally. So it's very, very actively pushing up and down, seeking balance. You would expect it to taper out at the top, accept somewhere in the middle, taper out at the bottom. That is the normal behavior. We've reached an extreme, we're going to turn around. We've reached the other extreme, we're going to turn around and finish somewhere in the middle. That's not what happened. Right on top of the 27.94, we have equal volume as we did up here or anywhere else. This is a market that is actively pursuing value, and so volatility continues. Okay, so this is and so this is where we stand here. We filled in half the gap and failed to hold. We fell below the 3,800, which is right here. We held below the MC point of control. This is a fair bit of selling as we push lower. Another thing you should note about yesterday to learn about the context and to keep the context in mind, look at this trend line here. If I can draw one. Oop. Look at this trend line. Somewhere, something like that. Trend up, delta, trend down. Do you recall what happened before that? When the market was selling off 2 days ago, it was trending down in price, trending up in delta, right? So there's kind of an aggressor fading the direction of the market throughout the session. So as the trade was moving higher in the S&P early on, as the trade was moving higher, you can see this is the volume delta. The delta was moving down, and then as it started to roll over, the delta went sideways. Very large lots buying early on, but all the other participants selling, and then when things sold off, very large lots started to sell a little bit, not very active, and then essentially the large and small lots stayed sideways until the close, where suddenly the very large and large lots started hammering on the bid into the close on earnings. So that's where we stand. So to me, this looked like it poked through, tested a key area, which I'll show you on the daily, and has come back below mid, below VWAP, below the MC point of control, likely to continue lower, and it sure did. It sure did. So as we look at the daily, what we ended up with on the daily is a tail on the upside. It pokes through this gap zone. We end up taking out the prior day's high, which is significant, that 3806.75 area. We push through, and then we come all the way back, and we finish near the mid of the prior day's range. And to me, this looks like a market that has poked and found sellers. So we have a bit of, on a daily candlestick, we have a nice wick, and it's showing an excess high. Prices moved up too high and were pushed back too easily, and they came back down. So with that, we ended up rotating down. The overnight low at 37.21, which is down here somewhere. And you can see that we've migrated quite a ways and have taken back a lot of this selling day 2 days ago, right? So this looks like it is faltering. If we do push up, it looks like we are going to continue, we're likely to continue to confront resistance. As I told you a couple days ago, the way this has shaped up at the close of Tuesday before the sell-off day, the way it has shaped up, I read to you the notes I put into the Head Trader channel at Convergent Trading, that this 38.45, 38.48 area is going to be formidable, and it's likely to present a pretty big area to overcome. And so I expect the price is likely to continue to explore lower. My expectation is we see 36.94 still before we find the buyers we need to test the highs yet again. So that's a lot to cover, right? So here's what's happened overnight. Let's turn off today's stock zones. Here's what's happened overnight. 510,000 contracts traded. We sell off right through the full session VWAP yesterday, and we continue to drift lower in the segment to the close at 4, and then we open back up and we are sideways with the Asian market opens, and then it starts to sell off with the Asian open, and it comes back into this lower distribution from 2 days ago, or from yesterday's extended trading hours. And so we are accepting this lower distribution now as value. We've poked up through, but overall we have come all the way down from 37.22 back to, 38.22 back to 37.22. The 38.22 comes from right up here. Oh, where is it? Right here. 38.22. Boom. That's your resistance line, the initial resistance line, the secondary resistance, that 40 that had a ton of volume the other day. And then we move into the volume resistance at 45 and 48 for a push higher. So this looks like a drop, an impulse, pullback, lower high, and a trip back here. So if we don't put in a higher low and start tackling this lower high we put in yesterday, 38.22, then it is very likely to see a rotation to the next big volume area, which again is 36.94 below. That's the narrative. That's the story. Let's take a look at what's expected for today. And I know these videos are getting long here. The Trader Bite's supposed to be 15 minutes long. I know they're getting long, but they do so naturally because of the action that we have, or that we are seeing. The story and the narrative is so important for any trader that wants to hang on, do the classic, let the winners run, cut your losers short. In order to do that, you have to understand the overall narrative. Anybody that's traded any size knows this, and it's just what's important. You can follow your indicators all you want, but confidence comes from understanding what the market has done and what it's trying to do and how good of a job it's doing, so that we can predict reasonably predict what to expect. This morning, inventory is quite short. Remember, the inventory is about 90% short. So the expectation is we are likely to push. In fact, let me pull up my inventory chart just to make sure it didn't balance out since that push higher took place. So here's my inventory chart. It's at 83% short currently. The inventory is 83% short. So my expectation is, remember, the 37.74 is a big area. It's a big area from a few weeks ago. It's a big area from the beginning of the year, also part of December. 37.74. So I'm looking for it to push, to rebalance higher, come back, consolidate, and move towards the overnight point of control, consolidate here before it starts to tackle the 37.21 and make a run for that 37.03 and potentially 3700 before we see a bounce. It is Friday, So I don't know how much action we'll see and how much range we'll see. And also the 10-year notes and the bonds are selling off. So I don't know how much the selling is going to get supported here. But we do have a risk-off market. That's why we look at that summary sheet first thing. But I'm going to tell you that the 10-year note is trending down this morning. So it's not likely that this will get a lot of impulse or a lot of flow. But given the narrative, given the auction, I've got to lean on that as the primary trade. The secondary trade, which in my opinion, if I was to set aside auction nature, my opinion is we are likely to consolidate on the open, pull back, balance inventory, impulse up, take out the overnight high, and walk ourselves back to 37.94, back into the MC point of control, battle the 3800 right here. That's this line right here, the century figure. Battle the 3800, and then squeeze into that 3806 area and hold steady here into the close. This is the second scenario. We are opening in range. There's really no value yesterday because it's such a boxy profile, but technically we are just below value, but we're opening in range, and those are the two main plays. So the question becomes, which side gets the impulse? Which side gets the support? Which side can I lean my back against when I'm pushing? That's what I'm looking to find out this morning. I could go either way, but again, given the way this has facilitated trade and what the action was yesterday, the auction looks like it is easier. The water will flow down the hill more easily on the short side today. But we've seen the market pulling back, and then we get a V-bottom low and we push back up. It is Friday. I would appreciate you hitting the like button on YouTube. And also, if you're on the Edge Clear page for the Trader Bite page, you notice the chat's not working. I have no idea what the issue is. This has been a problem with YouTube all week. So if you want, you can get on, you can click on the image and watch us on YouTube so you can participate in the live chat if you like. I prefer the live chat on the website, but it's not working. There's some sort of a connection issue when I look at it. So not my fault. That's how things are currently, but it is what it is. Good luck today, and I'll catch you on Monday. Mind your risk.